Welcome back. Now, the performance of the market has been weak in 2018 as the equities market had recorded a decline of 13.2% year to date. With earnings season here, we will be discussing the general performance of companies and further analyzing the potential impact on the market. Also, the medium-term expenditure framework was recently released by the Budget Office of the Federation. All of these we're going to unpack in this session. And joining me to put all of these together is the Head Investment Research at AfriInvest Securities, Robert Omotunde. Good morning, Robert. Good to see you.
Good morning, Chimeze.
Right. So we've seen the 9-month earnings season, here, and a number of companies are already churning out their numbers. How would you describe the performance so far?
Well, we think the performance is in line with expectation. I mean, coming from the performances we saw by the half year, and the general performance of the economy, we expected some of the numbers we've seen, even though we've not seen the bulk of the third quarter earnings season. But for the corporates that have released, particularly the quality corporates within the banking space, GT and Zenith in this case, and of course the biggest of the industrial goods space, that's the Dangote Cement. We've seen their 9-month result, and what we could say for the banking industry, for example, we're seeing a performance where top line, is not as strong, as you would expect. I mean, coming from the performances they recorded in 2017. I mean, this is 2018, and we're seeing the 9 months, Zenith, for example, was down in terms of top line gross earnings, but we saw GT, still managing to post positive earnings. But again, the bottom line, is something to interest in the banking space, but when you look at the industrial goods space, we're still seeing a very strong performance. Looking at what Dangote Cement was able to churn out, double-digit growth in revenue, as well as double-digit growth in profitability, still speaks of so much of opportunities existing within that space.
Now, which sectors would you say have been the most exciting so far since the commencement of this earnings season?
If I look at the two sectors which I mentioned, the industrial goods and the oil and gas, well, because we know some of the peculiarities of industrial goods and the banking sector, not the oil and gas, I beg your pardon. When you look at the peculiarities of the industrial goods, for example, look at the counters within that space. You have Dangote Cement, you have WAPCO, and then you have some other chemical, and allied paint producers. The quality one within the space, we've seen the corporate release their results. That's Dangote Cement, and the performance was quite good. And if you put that into context of what to expect, between now and going into 2019, looking at some of the challenges, the economy is facing and the need to grow our infrastructure base, we would expect some positive performance. So clear winners, I would say, will still be the banks, given that they've displayed this resilience over the period. We've seen, like I mentioned earlier, the quality banks, but for other tier 1 banks that are yet to release, we're positive. The likes of Access, UBA, we're positive on what numbers they're going to channel. So I would say that the industrial goods and the consumer goods definitely are the winners in the numbers that we've seen so far.
Talking about industrial goods, well, WAPCO recently released its results, and that result didn't seem to impress the market. For you as a market analyst, how do you see that result, and what do you think would have contributed to such a result that was churned out by that company?
Yeah, WAPCO has a peculiar challenge, when you look at their place within the cement industry. WAPCO plays in the same industry where Dangote Cement is, even though they have their own competitive strategy. But over the last two years, we've seen this drag in performance, particularly in revenues and of course earnings, and again, you could trace this to maybe the competitive strategy of the major player in that industry. Dangote Cement, for example, looking at its efficiency drive, especially at the EBITDA level, the operating level, as compared to what you will see from WAPCO, But again, we want to believe that management of WAPCO is definitely looking at this, even though we are not so positive in terms of the earnings outlook for them, over the next 1 year. Perhaps for us, WAPCO is not a buy, at this time, looking at some of the performances and some of the drag to their earnings.
Now, the Senate recently approved the borrowing plans for the government for the 2018 budget. That is believed to impact on capital spending. So how much of impact will this have on the industrial sector?
Well, again, you look at the budget numbers and the amount to be spent on infrastructure, from the perspective of construction, to be specific, and you see the place of Dangote Cement, in this particular sphere. But again, the worry for us will be, the much that can be done, given that we are going into an election, and up till now, of course, the proposed plan to borrow was approved by the Senate, and in a couple of weeks, we're expecting that the DMO, Ministry of Finance, will be approaching the international debt market, the Eurobond market, to be specific, to raise these sums of money, But the impact on the industrial goods may not be felt in this fourth quarter that we're entering into. So perhaps we'll begin to see this. Again, spending on capital projects, for the 2018 budget is allowed to slip even into 2019. We only hope that these monies are directed at, as proposed, so that they are not affected by the elections that we are going into. But again, the impact on the performance of the industrial goods will be much more in 2019 than in the current 2018 financial year.